Okay, in the UK, figures released today shows consumer confidence remained stuck at its lowest level since 2013 in November, amid uncertainty over the December 12 general elections. Aside from that, a couple of corporate news out there on the wire are getting investors' attention. One of them is British online supermarket Ocado, whichever one it's called. Well, let's bring in Juliana now to tell us more about that. Hello, Juliana. Well, that name, Ocado, I don't know what it is, but that company has said it will hire almost 400 new developers in the UK after it struck a deal to provide its online platform to Japan's Aeon. Its stock was the largest mover in early trade. How is that stock doing at the moment, and what does this mean, the deal for UK retail market?
Good afternoon, Chimmy. Well, Ocado are doing very, very well. As you said, at early trading, their shares jumped at 10%. I just had a sneak peek, and their shares are even up as high as 15%. And that's because they've done their first deal with the Asian supermarket giant, Japanese firm called Aeon. They've agreed a deal, although both Aeon and Ocado are not revealing just how much that deal is worth. It's expected to be billions. Ocado have been doing really well in the UK. The company is valued at £8.5 billion, even though it only has a share of about 1.5% of supermarket shopping in the UK. But the reason why it's doing so well is because it's trying to move away of just being known as an online grocer. They want to really develop their technology capabilities, and they do have several warehouses across the country where they do automated delivery picking, and that's exactly what Aeon want to tap into. Online grocery shopping isn't as big in Japan as it is elsewhere. A lot of their consumers prefer to shop for fresh groceries themselves, but that's expected to change over the next couple of years, which is why they wanted to get Ocado under their belt very soon. What Ocado will be doing is they'll be based in a region that also has Tokyo under its belt, and they will be divvying out these automated warehouses, and they predict that by 2035 they will have a joint share of the supermarket shopping group in Japan of about 1.5 trillion yen. So it's a lot of money, and it's good news for Ocado.
Interesting. Well, while Ocado plans to hire of course, energy giant Npower has announced plans to restructure its UK business, which could cost thousands of jobs. Now, Npower owner, Aeon CEO, gave conference call today. What did he say? What is in this restructuring plan by Npower?
Well, it's going to be a pretty brutal restructuring plan. Aeon, the German owner of the British energy supplier Npower, have announced that they will be axing 4,500 jobs over the next 2 years. This basically means that most of Npower's presence in the UK will disappear. As you can imagine, union bosses have already been coming out saying that this is the most cruelest way to tell people they'll lose their jobs just weeks before Christmas. The energy supply market in the UK has suffered over the past couple of years. It's been really tight for these suppliers to make any money. There's been a lot of smaller companies that have come in and taken a huge part of the market share. Also, as well, the government, a couple of years ago, they started tapping just how much gas suppliers could be charging their customers, because a lot of people in the UK pay by guessing and estimating how much, and that's changed. So the profits are down. Aeon have been quite tight about this. Their response has been saying that it's a strategic job, that they must try and bring some profit back. Npower apparently hasn't made any profits for Aeon over the past couple of years. Aeon already have a big market share in the UK, and what will happen over the next 2 years is that all of Npower's customers will gradually move onto them. So not a good story, and it's likely to hit the people who need the jobs the most, which are the people at the call centres, which is a big part of the UK's job market.
All right, it's the last day of trading in the month with all the Black Friday razzmatazz. What is the state of the markets, and what is the outlook going into December?
Well, when I spoke to Bosun this morning, I said, at 7:30 a.m. in Oxford Circus, there are already queues outside the stalls. But, a couple of hours later, Black Friday in the UK is already being dubbed Bleak Friday because those, bargain hunters who are looking for bargains are not being seen out in the shops. So even though, we have kind of adopted this event, this holiday, UK retailers are really relying on it. It could be a make or break weekend. So I'm sure going into next week, the figures that we would have seen from Friday will play a major part in how Q4 GDP in the UK is looking. Before we get into the numbers next week, we've got a big visitor in town, Donald Trump, the US president. He will be in London. There's a big NATO meeting happening with heads of governments next week, and that's going to be another make or break time for the British Prime Minister Boris Johnson, because of course a lot of people in the UK don't like Donald Trump, and he'll be coming just a week before people head to the polls. I think we're going to be ending the week and the month pretty down at the moment. If we look at the numbers, the FTSE's not doing great. The all share is down 0.12%. The FTSE 100 is also down 0.15%, and the FTSE 250 is down 0.10%. Sterling also not great. The British pound is down on the US dollar by 0.13%, also down on the euro by 0.08%, and down on the Japanese yen by 0.11%, Jimmy.
All right, Juliana, I guess with Donald Trump with you there next week, we're going to have a bumper show next week, a lot to talk about. In the meantime, enjoy the rest of the weekend.
Thank you, Jimmy. You too.
Right. In Asia, stocks were low on Friday as investors continued to watch for developments on U.S.-China trade following a recent escalation in tensions over Hong Kong. Hong Kong's Hang Seng Index led losses among major markets regionally as it fell 2.03%. Mainland Chinese stocks slipped on the day, with the Shanghai Composite down 0.61% and Shenzhen Composite declining 0.2%. Elsewhere, Japan's Nikkei 225 slipped 0.49%. South Korea's Kospi dropped 1.45%. Meanwhile, the ASX 200 in Australia declined 0.26%. And in the U.S., stock index futures were low on Friday morning ahead of a shortened trading session due to the Thanksgiving holiday. At around 5:35 a.m. Eastern Time, Dow futures indicated a negative open of more than 40 points. Futures on the S&P and Nasdaq were both lower as well. Market players are closely monitoring U.S. and China relations ahead of a December 15 deadline for a fresh round of U.S. tariffs on Chinese goods. Meanwhile, there's a focus on the retail sector due to Black Friday sales. Analytics firm ShopperTrack said that Black Friday will be the busiest shopping day of the year in the United States. No economic data or corporate earnings are due on Friday. Stock markets will cease trading at 1 p.m. Eastern Time after being closed on Thursday for Thanksgiving Day. And away from those markets, they're back here on the African continent. Ghana wants to finalize its fundraising plans for 2020 as soon as possible to enable the government secure finance for flagship program ahead of next year's general elections. The country wants to issue a Eurobond and conclude a $750 million share sale in a mining royalties fund by February. The finance minister, Ken Ofo-Atta, says the government hasn't yet decided on the size of the Eurobond, but the 2020 budget allows for fresh offshore debt as much as $3 billion. Okay, we'll take a break, and when we come back, we'll look at the discussions around the China Belt and Road Initiative at the recently concluded New Economy Forum that took place in Beijing. To stay with us.